From next week, all first home buyers will be able to purchase a property with a deposit as low as 5% regardless of their income. Experts claim the federal government's expanded scheme will simply push prices higher. Well, joining us live is independent economist Saul Eslake. Great to see you and thank you so much for joining us. Yes, so this kicks in October 1, days away. How do you see it playing out here?
Well, it will help some people who are able to arrange their affairs to take advantage of it. Probably people who, for the most part, will be able to buy a home anyway, but this will help them buy it a bit sooner. It's important to remember that although there are now no income limits and the limits on the prices of homes that can be purchased with this scheme have been increased significantly, the banks are still going to apply their normal criteria to determine how much they're going to lend. In particular, they will have rules about the multiple of borrowers' incomes that they're prepared to lend, and importantly, the proportion of borrowers' incomes that can be devoted to paying interest and servicing the mortgage. And APRA, the bank's regulator, requires them to stress test would-be borrowers to ensure that they'll still be able to service their mortgage even if interest rates were to go up by 3 percentage points, which is pretty unlikely from current levels, but nonetheless, that's what APRA requires the banks to do. So those criteria will still cut out a lot of people who might otherwise qualify for a loan. But to the extent that people are enabled to buy this scheme, to purchase housing, it will, like all of these schemes, enable people to spend more on housing than they otherwise would, and in some cases sooner than they otherwise would. And given the ongoing shortage of the supply of housing relative to the demand for it, that inevitably means that it will result in higher house prices. Now, people argue about how big that effect will be. Treasury has told the federal government that the effect on house prices as a whole will be fairly small. They say 0.5% over 5 years. I suspect the impact on the prices of the houses that first home buyers are likely to buy will be a bit bigger than that. A study that was done for the Insurance Council of Australia by respected economists Nick Gruen and Jean Tunney said that the impact might be closer to between 3.5% and 5.5% over a shorter period. And history says that they're more likely to be right than the Treasury estimate. So to the extent that some people are helped by this scheme, as I say, people who probably would have made into home ownership anyway, others who would like to become home buyers but will see prices moving away from them, they won't be helped at all. They'll probably be harmed. And that's what happens with all of these schemes that have at their heart enabling some Australians to spend more on housing than they'd be able otherwise to do.
Yeah, well, you make some excellent points there. It's not sort of a one size fits all, is it? And it's very hard to predict. There's so many different avenues to look at and so many possibilities looking ahead into the future. And as you mentioned as well, you know, you've got the issue with the supply, the demand. Also for renters, I know that Scott Pape in the News Corp papers today has written an article on that. He's perhaps not too keen on it, would you say?
Well, no, he's not. He's more scathing than I would be. But nonetheless, we're on the same page in saying that the main consequence of this scheme will be to put a little bit more fuel under the property price fire. We know that property prices are already starting to move in response to the 3 declines in interest rates that we've had this year, and this will just be a little bit more fuel on the fire. It's not going to be the only factor pushing house prices up, but it will certainly push house prices up. And we know from history that that's the worst thing that can happen for would-be first home buyers. And yet governments keep doing things, governments of all political persuasions keep doing things that push house prices up. And you ask yourself, why do they do that, since ostensibly they're concerned for and worried about the prospects of younger people becoming first home buyers? Yeah. The answer, unfortunately, is that there are only about 110,000 people who each year succeed in becoming first home buyers. And even if you assume that for everyone who does, there's 5 or 6 who'd like to but can't, that's still fewer than 1 million votes for policies that would slow the rate of house price inflation or stop it altogether. Whereas at any point in time, politicians know that there there are 11 million Australians who own their own home. There are more than 2 million who own at least one investment property. And even though those two groups overlap a fair bit, that's close to 12 million votes for policies that will keep house prices going up. So, on the one hand, fewer than a million. On the other, 12 million or more. Even the dumbest of our politicians can do that math, and they do. That's why they keep coming up with policies that have as their end result pushing house prices up rather than making them cheaper. And this particular scheme that the government's introduced, which does mean that the government carries the risk that house prices might fall by, say, 15% at some point, wiping out the part of the deposit that they've now guaranteed, that gives governments even more of an incentive than the political one they have to stop house prices falling.
A lot to unpack there. Yes, absolutely. Well, 1st of October is when it takes place, and we look forward to seeing more. We've got, insurance premiums and house insurance, whether we can insure our houses in the future or not as well. So many factors to look at. So we appreciate you always coming on to Sky News. Thank you.
Thank you for having me, Jenny.